Hi, Mike Flores here, co-founder of Trade Prosper, and welcome to Section 7, Video 3. We're going to talk about the stop loss that you will use for trading stocks or ETFs. Now, we're going to use the 20-day channel as the stop loss. Now, this was part of the original Donchian rules, and it is the preferred stop loss method to use for stocks and ETFs. I don't recommend using last bar for stocks and ETFs. And the reason is stocks are very volatile due to the fact that they have overnight risk because the market is closed and earnings risk. So we give ourselves a bit of a room to see whether this market really wants to move in the direction that it wants to go by using the 20-day low. All right, let's take a look here. So what we have here is an example of General Electric stock. And as always, we are looking for a couple things before we enter the position. We need our sideways setup, which we have here. We have more than 5 days. We need a rising ADX, which on this day we have, and we need to be near a 55-day high or 55-day low. You can see we're near the 55-day high at this point. So on this day, you'll buy on a break of the 55-day high, on a break of this line, this 55-day high, and if you look to the left of the cursor, the top one says 55-day high at 24.91. So you'll buy on a break of that high plus the cushion, and your stop loss for that day will be this red line, or the 20, also known as the 20-day low. If you look to the left of the cursor, you'll see 20-day low at 23.50. So on the next trading day, you would have gotten into the market. Your stop loss continues to be the 20-day low until the 20-day low changes. So notice here, the market's here. Now it goes higher. Okay, so on this day, you change your stop loss. Then it's the same stop loss for a few days, and then it goes higher. Okay, so you change it on this day. You change it on this day. You change it on this day. And so on and so forth until you get stopped out. Now, the reason why we use this method is as the market breaks higher, we're trying to give it room to run and take full advantage of the trend that's forming. And we don't really know where the market's going to end, so we just keep bumping our stop up to protect our profits as the market continues to move higher. So that's using the long side. Let's take a look at the short side now. This is ticker GDX, which is an ETF for gold miners. So basically what it does is it just takes a bunch of gold miners and it mimics the movement of the gold miners' prices. Again, for more on ETFs, look in the free content section of our website, www.tradeprosper.com, where we explain what ETFs are. Okay, so to get short, we start with we need a sideways setup. We see here we have a sideways setup, and then we see we have a rising ADX. So we have all the conditions to get short on a 55-day channel breakout. Now we're near the bottom of the channel, so we're expecting to break out to the downside. So you place your sell order on this day, nothing happens. This day, nothing happens. This day, nothing happens. Nothing happens. Nothing happens. But this day, we break lower, ever so slightly. Notice the low on this day is 45.35, and notice the low on this next day is 45.22. So your order would have been to sell on a break of 45.35 minus the cushion, and the next day you would have gotten into the market. Now on this day, this would be your stop loss. Remember, this is the stop loss that you choose the day before, and notice the next day doesn't change. So you keep that as your stop loss, and notice here the stop loss changes. So you move your stop loss down, and you keep moving it down every single day that the 20-day line comes down. Now notice for a few days it stays the same way, and then it changes again. So you keep lowering your stop loss. Here you go, you keep lowering your stop loss here, stays the same, you lower it again, stays the same, lower it again, lower it again, lower it again, so on and so forth until you exit the market. Again, our goal is to catch this down trend. All right, so you want to give it some room to run in the stocks using the 20-day high. All right, that's all for this video. I'll see you guys in the next one. Thank you very much.